The marketplace where people become millionaires or lose everything. Stocks explained. Imagine this. You walk into a marketplace. Not food, not clothes. People are shouting, screens flashing, money moving fast. Someone just made millions, another just lost everything. And one question hangs in the air. Do you want to own a piece of the future or watch others own it? Welcome to the stock market. Now here's the strange part. Nobody is carrying goods. So what's being bought and sold? Ownership. There are three main players. First, the buyers. Everyday people like you. They want one thing, to grow their money. So instead of just saving, they invest in businesses. Second, the sellers, companies. When a company wants to grow, it needs money. Instead of borrowing, it divides itself into pieces and sells those pieces. Each piece is called a stock. So when you buy a stock, you're buying a part of a business. Third, the middlemen. You can't just walk up to a company and buy shares. There's a system, a marketplace. In Nigeria, this happens through the Nigerian Exchange Group. This is where everything connects. Now let's make it simple. Imagine a pizza. The whole pizza is a company. Each slice is a share. If you own a slice, you own part of the business. If the business grows, your slice becomes more valuable. Example: a company is worth 1 million naira. Divided into 1,000 shares. Each share equals 1,000 naira. If you buy shares and the company grows, your money grows. There are two main types of stocks. Common stock gives you power and potential profit. Preferred stock gives you steady income but less control. Now here's where things get interesting. Why do prices move? Supply and demand. More buyers equals price goes up. More sellers equals price goes down. But the real driver, emotion, fear, greed, hype, news. Good news drops, people rush in, price goes up. Bad news hits, fear enters, people sell, price crashes. Same company, different emotions. That's the truth. The stock market is human behavior on display. So how do people make money? Two ways. First, growth. Buy low, wait, sell high. Second, dividends. Some companies pay you just for owning their stock. You hold and you earn. But here's the warning. If you treat this like gambling, you will lose. People lose because they panic. They follow hype. They don't understand what they're buying. The real winners? They think long-term. They study businesses. They stay patient. So next time you hear stocks, don't think numbers. Think ownership. Think businesses. Think opportunity. Because in the end, the stock market asks one question. Are you a spectator or an owner? And that decision can change everything.